Hi, this is another episode of my Your Money This Week podcast, looking back at the big money stories from the last 7 days. And actually this time it's over the last 2 weeks because I had the week off last time. To help me do this, I'm joined once again by financial journalist and analyst Danni Hewson. Used to be presenting BBC 5 Live's Wake Up to Money, now working at investment firm AJ Bell. Some of the stories we're talking about today, including plans from the G7 global leaders about a huge international corporation tax rate, potentially to help those big companies, Amazon, Google, Facebook, Microsoft, places like that, pay their fair rate of tax, how that's going to work. Also looking at some potentially good news if you're someone who lets your home and car insurance auto renew, plus some of the implications on the ever-changing traffic light system for international travel, what that actually might mean for you and your job if you've booked somewhere but have to quarantine at home. Hope you enjoy. Danni, thank you so much for coming back on to Cash Chats, helping me once more take a look at the big money stories. And this time from the last fortnight, because I had a bit of a break last week, so there's even more news for us to choose from. But there are some big stories which are going to have an impact potentially on all of us, if not right now, but in the future. And let's start on one that is a bit more longer term, but potentially really massive. And this is some plans from the leading world governments that could see an increase on tax on some of the biggest kind of businesses in the world.
Yeah, this has been going on for decades. I remember, I think it was 2013 when George Osborne was at the G20 and he came out of that meeting and he was saying, yeah, we're really close. And they obviously weren't. But an agreement tentatively seems to have been reached with the G7 for this global tax deal. And this is a two-pronged thing. So on the one hand, it's about making companies pay tax where they make their money. And on the other hand, it is about getting companies to sign up to this minimum threshold of corporation tax. Now, the figure there is 15%. Joe Biden had wanted 21%. Obviously, there are some countries like Ireland that will be balking at the 15%. But the idea is that, the world has changed, hasn't it? But the way that we tax those big companies hasn't changed. And a lot of people have been asking a lot of questions about exactly how much tax these companies actually pay. And the idea behind this is that it would bring in more money. Now, I know there are a number of questions being asked about how much money it will be bringing in, and also whether or not some of the existing measures like the UK's digital tax, which it brought in last year, would actually bring in more money. There's been a lot of debate about this. There's one school of thought that says it'll bring in more money if you stick with what we've got. But then the other school of thought seems to suggest that it could bring in billions of pounds in revenue for the UK. And right at the moment, when we're having to pay for all of this stuff related to COVID, any extra really does help. But it's not a done deal because it's got through this round, and there are still some questions because I know Rishi Sunak has been asking whether or not financial services maybe should be exempt. And then we've had Poland and Hungary, I think, saying that they wouldn't want to sign up to it unless there were other measures in place to look after companies in their countries. And it's got to get through not only the G20 next month, but then the OECD. I think it's 139 countries that have got to sign this off. I mean, it's a lot of paperwork to do, isn't it?
It really is. I mean, it's very promising. It feels like a really great step in the right direction. And I've been talking about it here on the pod for a lot of this year as well. Particularly, I'm doing my year without Amazon and their tax rates is one of the big reasons why people might have issues with them. But it's so much bigger than that, and it has taken something like the pandemic to get some of the world leaders, and obviously a changing of the guard in the States to really make this feel like, right, we are going to do something about it. And it's never going to be easy. You're not going to get 100% commitment from everyone. It's never going to be perfect, but hopefully it will kind of help bring a little bit more of that money that's needed now from those companies raking in the cash, doing very well from the pandemic, which puts less pressure on us as individuals. I mean, there could be knock-ons down the line. There could be that prices increase potentially and charges come in as companies try to bring back some of that profit. But hopefully it will happen. But there is interesting things like TaxWatch, who are a campaign group, have said that there's a good chance that in the UK we'll actually get less money from the big tech companies, your Google, your Facebook and your Amazon, because they're not based here. We might get money elsewhere from the likes of BT and Barclays, but interesting still that kind of an issue which, that paying that fair share of where the sales are looks like it won't be resolved by this.
Yeah, there's been a big debate about exactly how much money it will bring into the UK, whether it will be more, whether it will be less, how it will all work out. But there is an awful lot of money which currently, through different tax measures, which are currently perfectly legal, it means that these big companies don't pay. And it just doesn't sit well with ordinary taxpayers who, when they look at their paycheck, they think, hang on, how much has come out of my wage? So I think any moves in this direction are going to be popular. And, well, the devil definitely will be in the detail with this one, I think.
So we'll keep an eye on it. And something else we've talked about, the big tech companies. There was this most crazy sort of thing that happened on this week when the internet went down for an hour. It wasn't the whole internet, but it felt like it because there were some huge companies. We mentioned Amazon already, but Spotify, The Guardian. I mean, there were loads and loads of sites which suddenly a big 503 error thing came up online. What happened here, and what kind of consequences could this have if it was to happen, just in that 1 hour that it was down?
And really worrying as well, it was also the UK government website. Yes. So people may be wanting to book, COVID vaccines or tests or anything like that. They couldn't access the UK government website. Now, this was down to a company called Fastly, who provide complicated services. And honestly, I'm not a tech wizard, so I couldn't tell you the ins and outs of exactly how it works. But there was a user error. They say one of their customers updated some setting, and basically it was a bug. So the whole thing went down, as you say. I mean, they have said in a statement that I think it was 49 minutes it took them to re-establish 95% of the network, which is not a bad average.
I'd love to have someone like tech support like that for my site.
I mean, it really was incredibly quick the way it all came back up. But what was fascinating when you saw it playing out on social media is that a huge number of news websites were affected. So Twitter wasn't. So they were streaming the information that they would normally put out on their live sites on Twitter. So you were watching what was happening really in real time as these news sites use a different way to try and get the message across. But what was fascinating to see is that Fastly's share price went up through the roof, probably because of that 49 minutes.
That's fantastic. That's amazing, isn't it? You really think this would be one of those things where people were thinking, oh, that's not good. We don't want to entrust such important services. I mean, it was, I think the figure you mentioned before we went on air, $29 million just lost in digital ad revenue, let alone the sales that the likes of Amazon or people might have been getting in that time. Huge amount of money at stake just from one company. So yeah, that's amazing that they've done well out of it.
Yeah, there will be a lot of questions, I think, asked about exactly how many of these big companies use this one provider and whether or not they need different. I know certainly the BBC, it dropped out for a couple of minutes and then it was back up and running. So I would imagine there'll be a lot of tech guys in all of these companies now running around thinking, what are our backup plans for when something like this happens? And I certainly think, it's a lot of eggs in one basket. If you're going to drop that basket, eggs are going to break.
And I think it comes back slightly as well to some of the kind of things that we're just doing. So much more of our life is online now. And you think about what happens if the broadband was to go down. Your working life now massively impacted, but so much of everything else you do, your entertainment, your retail experiences, so much of it is online. If this was longer than the 50 minutes, it's not just about sales loss for these companies. It's actually could have a big impact on what we can do, particularly with this one, which was such a wide-ranging and wide-reaching impact.
Yeah, and I've certainly felt that today because they are putting in new broadband cables in the road outside my house, and I had 2 hours where the broadband was dipping in for, 10 seconds and dipping out for 10 seconds. And when you're searching something on the web and you just get this black hole and you think, no, it's supposed to be instant. What is going on? Frustrating. Yeah.
So we've got some good news next. I think broadly good news. And this was just from the week before last. And this is about home and car insurance and some big changes that will be coming into play in January 2022, so in just over 6.5 months' time. What's going on here?
Yeah, so car and home insurers are going to be banned from charging existing customers more at renewal than they would if you were taking out a new policy. And this has been a bugbear of a lot of people for a really long time, because if you're loyal, you kind of expect that you're going to be rewarded from that. But that's not what happens. What they do is they seem to get bonuses, perhaps, from attracting new customers, and keeping existing ones hasn't been the thing that they've been looking to do. And I don't know about you, I do try and keep tabs on my insurance. I really, really do. But this year I came a cropper because I got that email through. And I thought, right, I must look at that. And I put it to one side and I put it to one side and I forgot about it. And when I finally got to it, it was too late. And my premium had gone up. And my mum, who didn't leave it to one side, has managed to bring her premiums down by £20 a month. And she thinks that's absolutely brilliant that she has managed to do that. And I've completely failed. So, yeah, the fact that from next year, this loyalty penalty won't be allowed to happen, it just eases people's minds, really. And I think potentially this could be a really good thing for the insurance business, because they do come in for a lot of stick for something like this. And if you don't have to jump through those hoops every year, then I think they're going to get a much better reputation.
Yeah, absolutely. It's one of those things that people like myself, like your mum, and like you on normal years, have been actively sort of doing the comparison, doing that search, trying to find that lower price, and have been saving a lot of money. Well, we're going to lose out now. You know, that's we're going to probably pay more, because it doesn't mean that everyone suddenly gets cheaper prices. It just means they're going to even out a little bit more. So you renew, it won't be as much more expensive as before. It could still go up if generally premiums have gone up, and the newbies, that'll also probably pop up a little bit, but that's probably fairer. And I think they're saying like £4.2 billion will be saved over a decade. And that's a lot of money that, you know, overall, and people who need it, hopefully, you know, that's extra money in their pocket. I think there are a few more complications in there as well. Money Saving Experts done a really good analysis of this. So this same deal is only if you're going through the same channel, as they call it. So if you went direct and you renewed direct, auto-renewed, then you'd get the same deal. But if you went via a comparison site, well, there could be a different deal offered via a comparison site. And in fact, a different comparison site could also have a different deal on offer. So it's not quite as simple as, right, you're this risk rate, you get charged this amount of money. And you still potentially could save money by shopping around, because all the different insurers will have their own prices. But I do think this is good news for us. And it'd be nice to see if we could see that elsewhere as well, and take some of that friction. Because as easy as it is to switch your energy, as easy as it is to switch your bank and to your mobile phone, all these things that I talk about all the time, there still are a lot of people who choose not to. And as you say, that loyalty penalty, it can really add up to a hefty amount.
And we get busy, don't we? We find that we just don't have the time sometimes to put in that effort. Or maybe some people might think, oh, it'll only be a £5 that I'll save, I'm not going to bother. And the amount that you can save can work out over the course of a year to be pretty substantial. But you have to be on top of these things. And it is easy to lose out sometimes.
And you know what? Insurance is one of the worst. I quite enjoy switching most of my products, but you know, I'm a money geek. You know, I do this stuff. I enjoy it. This is why I do what I do. But I hate doing it for insurance, because it's always so complicated. If you're to do it properly, and I'm someone who tries to do it properly, you're going to be looking through all the different terms and conditions, all the exclusions, all this kind of stuff, and it's a lot of stuff that doesn't always make sense. And even if you do that, they can catch you out. And somewhere where I think a lot of people maybe overly rely on insurance and think they're going to get something from it is travel. And they're potentially going to come unstuck because of the other big thing that happened was the sort of reassessment of these travel zones, moving Portugal from green to amber. We saw all these people trying to race back before that deadline came in. I mean, we've covered it on the pod before. It just doesn't feel like the right time to be booking anything, does it? Because that insurance won't cover you in most instances if it's down to a disinclination to travel.
And you've got to really feel for the people that were out there, maybe just for a couple of days, and then found out that this was going to happen, spent the rest of the time either thinking, I'm going to have to quarantine when I get back, and it took the shine off the holiday, or desperately trying to find a flight home and not being able to enjoy the break at all. And I know a lot of people I spotted on social media, and in fact some of my friends were saying, well, why would you go on holiday somewhere like Portugal right now? It was obvious it was all going to go badly. But I don't know, I think people have been so fed up with the constraints that we've been living under. And if they had rebooked from last year and they thought, you know what, we're just going to go with it because otherwise it'll roll over and roll over and roll over and maybe we'll never get to take it. And it was half term, and a lot of people with kids, it's expensive going on holiday in the UK if the weather's not great. They weren't to know it was going to be a fantastic week. And they were maybe thinking, you know, a week on a beach, just let the kids jump in the pool. We don't have to spend a great deal elsewhere. Where actually this week it was fine because you could just leave them in the garden. But it is difficult for people to really get a handle on what's going on with the travel situation when the goalposts do keep moving so drastically. And I really feel for the airlines and for the travel companies who are trying to, you know, keep their businesses going when they've no idea what's going to happen next.
And there's actually, you know, some of them have done that better than others over the last year. There's news this week that the CMA, the Competition and Markets Authority, are investigating both British Airways and Ryanair for incorrectly how they've dealt with passengers who couldn't fly, giving them either the option to rebook the flight, which might have come with an extra charge, or to take a voucher, or to go on a flight, even though this was potentially during a time when the government had said, you know, you can only travel in really essential reasons. So hopefully, potentially, this investigation comes along. There could be some people who are actually entitled to that refund, you know, retrospectively, because they've either paid more money or they've had a voucher which they've still not been able to use. It'd be interesting to see how this one pans out.
Yeah, it's been really difficult, and I'm on a couple of the Facebook pages for people that are very cross because they haven't been able to get refunds for their BA or their Ryanair flights, and they felt that they should get refunds. And this investigation is going to be interesting. And usually what the CMA try and do is they try and have a dialogue with the airlines before it gets to court. So we'll see whether or not an agreement can be reached before it does get to that stage. But both BA and Ryanair said that, you know, they did offer refunds in some cases, case-by-case basis, but they felt that they'd done everything right. They'd behaved legally within the letter of the law. And the chief executive of the CMA, Andrea Costicelli, it's an interesting name to pronounce, isn't it? He said that, you know, while airlines have had a tough time, and we know that they have, and their bottom lines have been hit drastically, he said people shouldn't be left unfairly out of pocket for following the law because, of course, they couldn't travel. And that is the key thing. When they couldn't take those flights, they feel that they shouldn't have had to pay for it. They feel that they should be able to get their money back and not have to roll them on. And I think the appetite for rolling them on has also dwindled as well, because people who've taken vouchers from last year were maybe thinking that's fine because we'll be able to use them this year. And now they're finding that they probably can't use them this year. So a refund right now would be very nice. Thank you very much.
Yeah. And I think the other sort of thing you would talk about, that kind of the actual sort of tangible cash that people might be missing out on or losing out on because of they can't travel or whatever has happened. But the other thing, particularly if holiday destinations do move between these different traffic light zones, is that quarantine and the impact that will have. Because although lots of us, you know, you and I, we can work from home and many professions can, there are still a huge number of jobs out there where if you can't come into that place of work, you cannot work. And therefore, if you're 10 days at home or even worse, 10 days in a hotel, well, what does your employer do? You know, they don't have to pay you for this. If you haven't got annual leave, additional annual leave to take, it could be unpaid leave. So this extra financial burden that might come on top. And of course, if you're in a red list hotel quarantine, that's even more money. So it's not great at all, I think, for holiday makers. It feels to me that it's just too risky on so many levels, at least for the next few months.
It's really difficult. And if you are thinking of going away somewhere outside of the UK, it is really worth having a conversation with your employer ahead of time just to find out what would happen if you couldn't go into the office. Because even though, in some jobs you can work from home, things are sort of shifting a little bit. And maybe while you're away, your office decides, actually, we are bringing back people to work from the office. And what happens if you get back and you find that, but you're stuck at home? So, yeah, make sure you have those conversations first. But, well, most people now are thinking, right, we're going to be stuck in the UK again, trying to find somewhere to go. The prices are just creeping up and up and up. And this could be quite a good time for the leisure industry. Some of those UK hotels and bars and restaurants, they could do quite well out of it. Although, when you go on holiday, rather than when you staycation, you do tend to spend a little bit more, and they will be missing out, particularly those city centres, on those foreign tourists and their wallets.
And, there will be also some things which, we're very, very, very close now, only 10 days away from the 21st of June. And at the time of recording this, we still don't know whether that will happen or not. But I can't see it happening. I think they're putting the noises out there already 2 weeks, maybe 4, just to try and get us ready for it. And that will also have a huge impact on what you can do if you're at home and the costs that are associated. But it's also going to have a big effect on those areas that haven't fully opened, not opened up yet. And we know there'll be certain people, the wedding industry, the sort of live music industry, all those people have done nothing at all. But even some that have reopened and partially reopened as much as they can, obviously outdoors, 6 indoors, still see it very, very, very tough times ahead. And there was a report this week from the ONS about pubs, and 1 in 5 pubs still think they might struggle to get past August.
Yeah, this was a great name for this report. It was called Economies of Ale. And it made for some quite disturbing reading in some ways, because although the percentage of pubs that now think that they are in a better position than they were, it has crept up. And the number expecting that they're not going to make it through has fallen since reopening. You're still looking at a huge number of pubs and restaurants that are worried about making it through the rest of the year. And even though they have reopened, they're having to follow the social distancing measures. And I remember talking about this way back in the summer last year, and pubs saying, look, it's all very well reopening, but we're going to be able to take maybe half of what we would normally take because of the amount of people coming through the doors. Now, I know that a lot of these venues have been able to diversify. They've been able to maybe offer, delivery or pickup, or they've been able to extend the amount of space outside so that they can get more people through the doors. And I know that a lot of people are really desperate to get out and go out for a meal. And there is a lot of saving out there that people are now willing to spend on things like restaurants. But, if you're having to queue for a restaurant, or if you book a table and you've got to wait 2 hours to get in, which is happening in some parts of the world, it will start to put people off. And yeah, I think there's been a lot of talk about whether or not furlough needs to be extended for the likes of the travel sector. And I would imagine it won't be too long before the hospitality sector also start to ask these questions, because although they're saying that they've got vacancies, they've also, in some sectors, particularly those city centre sectors, likes of central London, which rely on those foreign tourists, I think that they're going to be in a world of pain come the end of this year unless things change. And as you say, the conversations at the moment seem to suggest that they're not going to change at the end of June. And I think the public sentiment at the moment is kind of behind that. They want to continue to enjoy the freedoms that they've got back, and they don't want anything to jeopardize that.
Yeah. And you think about right now, I was down in London last weekend, all the pubs, the Euros, it was everywhere. It was thinking, right, this is it. If we get everyone in to watch the football again, that's going to make a big difference. Maybe that's one of the things that can kind of really help us get through the summer, because huge debt, £6 billion worth of debts that some of these collectively pubs have, including a lot of that being rents to landlords, as well as some of those sort of loans that they've taken out to keep things going in this time. But if that's factored into their figures, and you can only have 6 people inside, well, groups of 6 inside to watch the football, again, it's not going to have that boost that they were hoping for. So again, it's all with all these things. We're keeping a close eye on this, haven't we, for such a long time now, but it's still going to be a while before we get any sort of definitive answers.
Yeah, there's a lot of questions, I think, and for a lot of these businesses that were shut for such a large amount of time, you've got to remember that they've had to go to a bank, they've had to take out loans, they've had to defer rent payments, and they're also, when they're restarting, they've got that added cost because they had to throw away loads of beer and loads of food. So it's not like they've got stuff left behind from last week. When they reopen, they've got to bring everything in again. And that comes with an additional cost. And particularly when we've had supply chain issues as well, and the costs of some things are going up and up and up, it's going to get quite tense, I think, for some of these businesses. And yeah, it's a worrying time for them.
One last story now, and I do get a bit of deja vu when this one comes along, because I feel like every couple of weeks the same headlines appear, but this is kind of the scale of it. I think it's worth talking about it again, and it's the house price jump, just how much they have gone up in the last year and exactly where they are. I mean, it's no surprise to say they're up, but it's by a huge amount, isn't it? There's a couple of indexes, but they're both broadly the same.
Yeah, so the Halifax said that house prices had risen by more than £22,000 to an average of 261,743. And I don't know if you can hear the dog wolfing in the background, but he's clearly not a fan of this. If you've got a house and you think of it as part of your overall investment strategy, we all like to see these stories. If we have a home, we like to think, oh, our house price has gone up. But if we then want to move, of course, we've then got to find the extra money. And what it is doing as well is it's making it even more difficult for people who are not already on the housing ladder to get on the ladder. And Andy Haldane, who is about to leave the Bank of England, chief economist there, he said that the housing market's absolutely on fire and warned that if there wasn't substantial intervention in the number of houses being built, then, we're really storing up trouble here, because the inequality is just going to grow and grow and grow. And you're right. I mean, it is an issue that we've been wrestling with for decades. I don't remember the last time we said, hey, we've got plenty of houses, it's not a problem. House builders had to stop for a chunk of time during the pandemic. I know that at the beginning of the year, a number of them were saying that we're back in terms of the number that we're building to pre-pandemic levels, but pre-pandemic levels weren't cutting it. No. They weren't cutting it then, and they're certainly not cutting it now. So yeah, house prices going up, and of course, people are looking for more space. And I was reading that, people who are now able to work from home, they've got a substantial amount of cash, maybe they had a flat in London. Now they are trying to buy those lovely, fantastic properties in the likes of the Yorkshire Dales, which have always been used for staycations. So there is this tension now as well between people who want to run a holiday business and people who want to have that lovely house in order to work from a lovely environment. So not only are prices going up, but they're sort of shifting in terms of where you're seeing these price hikes as well, because what was desirable is not as desirable as it used to be. And maybe, a rural retreat in wonderful Yorkshire Dales with spotty internet and not too much access to the train lines, now it's okay because maybe you only want to go into the office once or twice a month, not every week.
Yeah, you're right there about how the first time buyers as well have hardly got a looking during this. The stamp duty holiday, which is due to kind of change slightly from the start of July, be £250,000. And then in October, it go back to the standard £125,000. That's sort of tailing off. So potentially this big rush that we've seen of people moving houses will slow down. Potentially, at least in July to September, they'll still be trying to get that little bit of a saving there. But it was interesting, some FCA data showed that the record proportion of the mortgages have been people moving home as opposed to people remortgaging or those first-time buyers. So I'm not quite sure who it's helped, all of this. Prices are going up to crazy prices. People are spending a huge amount of money. They're getting more space, potentially, but it's leaving all these one-bedroom flats that people, they're not on the market, they're not available because everyone's going for the big stuff. It just doesn't feel that this can surely be any sustainable for much longer.
It doesn't feel sustainable. And even though people now have access to things like 95% mortgages again, which is giving more people access to the property market, maybe where they wouldn't have been able to before. And of course, because we had the pandemic, some people have actually found that they've been able to save quite substantially because they haven't been able to go out. And whereas before they thought that a Starbucks coffee and a Pret sandwich was an absolute necessity at lunchtime, now they're finding that it's a instant coffee and a tuna mayonnaise that they've made themselves. So they have a bit of cash. So there is demand, and I don't think that demand is going to go away. What does worry me, though, is that all of those people that have been able to take mortgage holidays might now find that they are coming to an end. And if they are back working at 100% of their salary, 100% of their hours, then that's okay. But they are going to need to have a chat with their bank or mortgage provider just about how that's going to impact their payments going forward, just to make sure they've got it covered. But some people are now going to be facing some really difficult discussions about whether or not they have to sell their home in order to live.
Yeah, and like you say, that real risk that overstretched with house prices so high and all these things going on, the affordability might be okay now, but extra costs come in or you come to remortgage, it could have that knock on then as well.
Oh, interest rates, ridiculously low at the moment. And there will be quite a number of people that don't remember interest rates being above sort of 3-4%. And it's a huge amount extra that you suddenly find you have to pay on your mortgage if those interest rates start to climb. And of course, now we're beginning to have these conversations because the economy is reopening and because the spectre of inflation, it is ever present at the moment. I mean, US inflation is crazy and we're getting UK data next week. So there is a real possibility that interest rates will start to rise in the medium term, we're told, not in the short term. But it is going to be a rude awakening for people who've never experienced anything above that. So if you are thinking about remortgaging, do think about whether or not it is worth getting a 3-5 year fixed term rate so that you maybe cushion yourself against any surprises in the next few years.
Danni, thank you so much. It's always great to get your insight on here. That wealth of experience is really, really comes through. If people want to find you online, what's the best place for them to follow your updates?
The best place is probably Twitter at Danni Hewson, and you can also find us on the Money and Markets podcast from AJ Bell. Just have a bit of a Google, or I'm on LinkedIn as well. So always around.
You can find me on one of those episodes from a while back as well, so you can check that one out as well. That'd be great. Danni, thank you so much.
Thanks.
If you want to read more about any of the stories Danni and I have just been talking about, head over to becleverwithyourcash.com/cashchats201. You'll find links to further details and articles about all those things there. And if you want to make sure you get 2 episodes of my Cash Chats podcast, because only one of them's here on YouTube, make sure you head over to whichever podcasting app you use, search for Cash Chats, hit follow, and you'll get those new episodes in your podcasting app every single Tuesday and Friday. My name's Andy Webb. Thank you so much for watching. Until next time, cheers. And here are a couple more videos you might find interesting.